Good afternoon, everyone. Here is CA Sanjay Nikam, Regional Council Member from WIRC. Welcome you all in today's webinar on emerging trends in investigation and assessment. It's a pleasure to be your moderator for this session that addresses such a critical area in the field of direct taxation. Let me begin with welcoming all the delegates, those are on the forum. First, I would like to introduce Piyush Hajarji, Chairman of Direct Tax Committee, Central Council Member of ICI. Also, we have with us Vishnu Agarwalji, a Vice Chairman of Direct Tax Committee of ICI and a Central Council Member and past Chairman of WIRC. Last but not the least, today's learned faculty, G. Ramaswamy sir. He is former President of ICI and past Chairman of SIRC. Also, I recognize the presence of C. Ramkrishnan Bandepalli ji. He is a senior chartered accountant who is going to be on the forum for our guidance. To start with, I would like to introduce our Chairman of our Direct Tax Committee, CA Piyush S. Chajarji, who has experience of more than 25 years in the practice. He is a BCom, FCA and DISA qualified. Also graduated from NM College of Commerce, Mumbai. He is an expert in tax litigation and advisory. CA Piyush Chajar has made significant contribution to the finance and accounting landscape on both national and international level. He was a member of Central Council of ICAI from 2022 to 2025 and presently he is also a Central Council member for a second term of 2029. Within the ICI, he has served all the three pivotal standing committees like Executive Committee, Examination and Finance Committee, showcasing his multifaceted understanding of the profession. He's currently, as I told you, he's currently a chairman of Direct Tax Committee. He was a member of working committee for the AC.
Have we lost him?
Used by you, I think
Yes,
you
yes.
start, sir.
So
Yes, sir.
I think so. We have lost our moderator due to some technical or maybe the connection issue. A very good evening to all of you, all the participants who have just joined this webinar. A very respected, the Honorable Past President of our Institute of Chartered Accountants of India, G. Ramaswamy ji. Thank you very much. We are much obliged at Direct Tax Committee of ICI. You accepting our invitation, it has been a privilege for us. Thank you very much, sir. And taking up such an important topic, that is emerging trends in investigation and search. I think so nobody else could be better for DTC other than you as a speaker. Thank you very much for joining us. CA Vishnu Agarwalji, a vice chairman, with whom it is his first term of his council year and with whom I have a privilege of working since last 10 months in this Direct Tax Committee. And a lot of initiatives which we have taken, it would have not been possible without his support to me. Thank you very much, Vishnu Agarwalji, for being there always with the Direct Tax Committee. And for me as a younger brother, thank you very much, Vishnuji. CA Ramakrishna Bandepalli, the very senior chartered accountant from Chennai, who has joined the panel also. Thank you very much, Ramakrishnan ji, for joining us. In absence here, we were listening to CA Sanjay Nikam, who is a regional council member of the WIRC and also a chairman of WIRC of Direct Tax Committee. And all the participants who are here for this webinar, this Thursday webinar of Direct Tax Committee, a very important webinar. Thank you very much, all of us, all of you, for joining this evening. Just before the faculty takes over and the vice chairman would be speaking also, I would just like to tell you, yesterday we had our third meeting for this council year of Direct Tax Committee, and very important issues were being discussed at that moment of time. And one of the important decisions which we took is in regard to doing programs on Income Tax Act 2025. And in fact, this is the last Thursday webinar on these topics apart from Income Tax Act 2025, but my vice chairman has already drawn a very great programs in 8 series, and I think so very shortly we would be announcing learned speakers would be joining. An idea would be to brief the members about what is coming in, and when we go ahead, because we have been told that new forms, new rules, and all other ancillary forms apart from ITRs under the Income Tax Act 2026 should be coming in first week of January. So maybe the December sessions may happen on the act. We will try to also modify those topics as and when the rules and forms also come. But yesterday's meeting, we have decided that we will do series of the programs for the benefit of the members as such. So the webinars will continue. At the same time, since we got an approval, we had approached CBDT to join hands as a publication partner, wherein all our programs, all the physical programs which will happen across the branch, maybe an outreach programs for the public at large, maybe an educational programs for the membership at the large. We'll have a joint publication partnership where all our flyers, all our banners would contain the logo of Income Tax Department also. And we also had a committee meeting before with the income tax group form for the purpose of outreach. And that group of Income Tax Department has been given terms of reference by the finance minister herself that they should do an outreach programs during month of December and January, and they should also open Institute of Chartered Accountants of India. And therefore that committee had invited us, where myself and vice chairman had joined that committee meeting. And in that committee meeting, it was decided that whatever outreach programs or educational programs institute would do for its 175 branches or study circle will share the list with that committee, and that committee will ensure that in all such programs, at least for initial half an hour or maybe 1 hour, there is also an address from the local commissionerate or the whosoever is the local senior officer, depending upon where that program is happening. So I thought I will just update you on that. These two important decisions were taken yesterday by the Direct Tax Committee, and why this matter. Third very important decision which has been taken, as you are all aware, that we have already put up a limit of signing a tax audit limits. Signing the tax audit reports to 60. So from 1st April 2026, that has to be implemented. So based on that council decision, the matter was sent to the UDIN for incorporating those limits in generation of UDIN itself. So after the council also approved the UDIN directorate's agenda, yes, that those limits should be incorporated, whereby if the 60 tax audits have been signed by one particular member, he should not be able to generate any further UDINs for the purpose of section 44AB. That is, which is relevant for the limits to be calculated. So after that approval, matter went back to UDIN directorate. UDIN directorate has already formalized a schema, and it has sent to Direct Tax Committee for the approval, which has been approved yesterday after certain changes. And the committee also decided that that schema may be run through certain experts, which held their first meeting tomorrow at 11 a.m. And they will be discussing and finalizing that schema, that how the blocking of UDIN should be done once it reaches 60 signatures by a particular member. So these were three important decisions in the backdrop by this yesterday's meeting was that I thought I'll take this opportunity, because it's only a day wherein this was held. Apart from that, this year, because we have already completed more than 10 months, and we had a lot of engaging sessions with the CBDT, with the various parts of the Income Tax Department, including we had presented a pre-budget memorandum on 27th of October. And meeting was very successful with the chairman CBDT, wherein in fact chairman said that institute and the CBDT should work as a one person. We should work as a we and not work in isolation. In fact, they suggested, and he suggested, in fact, that let us make some FAQs or some circulars or guidance jointly, wherein if the CBDT and ICAR are able to issue those joint circulars or FAQs, probably then membership across, who are the interface between the taxpayers on the one side and the department on the other side, if they are forming part, if they are part of those groups where FAQs are finalized, obviously the membership across would follow that, and there would be substantial reduction in the litigations. So taking that forward, because obviously if we get an opportunity to be part of those FAQs, and if it comes under a joint name, I think so there would be another feathering cap for the Institute of Chartered Accountants of India. So we have already drafted one FAQ which was approved in yesterday's committee, and the committee decided to refer it to the certain expert group also before we send it to the CBDT for their final approval. If of course this has been done at the insistence of the chairman himself, I hope whatever he had told in that meeting, that goes through on paper also, we get an approval, and if we are able to release it jointly, I think so there would be nothing like that for the Institute of Chartered Accountants. So that's the background. Apart from that, we are doing a various works on the various aspects of it, but today I would not like to touch upon, because I will be coming next week also. I'll try to touch upon other aspects also, but today of course we have to hear none other than our past presidents. So I'm not going into details of other initiatives. I'm sure Vishnu Agarwalji will be throwing some lights on this programs which will be coming on Income Tax Act 2025 also, and other aspects also. So thank you very much to all of you. Have a great learning session for the next 2 hours. Thank you, Sanjay, in your absence, because there was some problem. So I continued with my opening address. So over to you, Sanjay.
Thank you very much for your deliberation and sharing your wisdom and efforts you are taking for the betterment of the fraternity. I'm working with you since last 7-8 months, sir. I can see whatever you elaborated is not even an iceberg of the activities you are conducting for the members. So definitely it was helpful to us, and we will eager to hear you out again and again whenever it's possible. So now I'll move on to the other delegate who is also equally experienced and contributing to the fraternity. As I told you earlier that Vishnu Agarwalji was the past chairman of WRC. His experience for the fraternity is very imperative and welcoming. Friends, let me introduce CA Vishnu Kumar Agarwalji, a BCom graduate, FCA and DISA qualified, Central Council member for the term 2025-29. He is currently serves as a vice chairman of CP committee and directors committee of ICAI. Also, he's contributing in several key committees, including the standing committee, executive committee, management committee, and finance committee of ICAI. C. Vishnu Agarwal ji is a chartered accountant with more than 2 decades of experience and specializes in income tax matters. His extensive expertise are search and survey proceedings, Benami and black money proceedings, ITAD proceedings, and income tax litigations. As a renowned speaker and author, he has delivered numerous lectures on direct tax and litigation matters across various platforms. He has also authored a book, Landmark Judgments of Income Tax, which serves as a valuable reference for tax practitioners. His leadership and contributions are like former chairman of WRC of ICAI for the year 2017-18, serves as a served 3 consecutive terms during the period 2010 to 2019 as a regional council member of WRC of ICAI. He has represented WRC of ICAI before various government authorities. His social engagement and community involvements are beyond his professional commitments. CA Vishnu Kumar Agarwal ji is actively involved in social service and community initiatives. He is associated with various organizations like Aravali Agarwal Samaj, Lions Club of Mumbai, RBG Alumni and Vasai CA Hostel Alumni, Bharat Vikas Parishad, Rajasthan Seva Samiti, CA Shri Jin Mata Prachar Mandal. His professional acumen, leadership role, and dedication to both the professional and society makes him a respected figure in the accounting and taxation domain. With a big round of
Thank you, Sanjay bhai.
applause, I'm welcoming Vishnu Agarwal ji to share his wisdom with us.
Thank you, Sanjay Nikam ji. Our own honorable past president, and I can say my father figure, G. Ramaswamy ji. Our chairman of the direct tax committee, Piyush Chhajed ji. Sanjay Nikam ji, regional council member and the direct tax committee chairman of the WIRC. Ramakrishnan ji, very leading chartered accountant from Chennai. Our office, Priya ji, and all my office. Thank you very much, sir, G. Ramaswamy ji, sir, past president, sir, for accepting our invitation and coming here for the very important topic on the discussing on the investigation. Because, sir, your large experience from last 4 decades, sir, last 40 years, sir, I am sure, sir, my each and every chartered accountant will be benefited, because so many problem faces by the chartered accountant, because each and every chartered accountant is not doing the practice of the investigation. And when any investigation is held on any client of their chartered accountant, sir, they are facing so much problem because of the lack of the experience. They know each and everything, but how to handle, how to how to handle the assessment, how to handle the investigation wing. It is a very important thing during the investigation process, sir. It is not a simple thing. It is a very clever art of every chartered accountant to help out from the investigation, either in the not only in the matter of the income tax but also the GST. The same experience comes here and there, sir. So thank you very much, G Ramaswamy ji, and along with Ramakrishnan ji to coming here, sir. Sir, just I like brief two three points for our direct tax committee, sir. Sir, we have came out this year with the Income Tax Act first time 2025, and we myself and my chairman have thought that why from direct tax committee why should we not print our Income Tax Act 2025, because each and every publication house is selling in the 2000 rupees and 2500 rupees. So benefit of our all chartered accountant for fraternity, we came out with the Income Tax Act, and this is available for sale, sir, for in only 500 rupees, sir. Sir, again we have came out with the revised guidance note of 44 AB, so that my each and every chartered accountant, wherever they were facing the problem for filing the 44 AB tax audit report, they have benefited. Again, sir, for my young chartered accountant, we came out with the checklist for the all the ITR forms, so my each and every chartered accountant has been benefited, sir. So many initiatives, so many representation we have done, and every Thursday, sir, we are doing one webinar for the public at large, sir. And sir, next 8 weeks, sir, we are planning for the new Income Tax Act series, sir. So each section by section, topic by topic, sir. So my each and every chartered accountant can benefit it overall view of the new Income Tax Act 2025, sir. Thank you very much, sir. Again, once say thanks, sir, from my bottom of heart for accepting our invitation and giving your time, valuable time, sir, for my each and every chartered accountant. Thank you, friends. And now I request Sanjay Nikamji to introduce G Ramaswamy ji. And sir, sir, first you take, or sir, first Ramakrishnan ji take, sir?
Sir, can you unmute yourself, sir? Ramaswamy, sir. You are on
Ramaswamy,
mute.
sir.
Yeah, first I
Sir.
will just introduce, then I will take topic, then I will invite Mr. Ramakrishnan. He is
Yes, sir.
also
Yes,
having
sir.
a
Yes, sir. So
overall
I
picture,
request.
and he will also share his views. Then we
Yes,
can
sir.
have a question
Yes,
and
sir.
answer.
So I request Sanjay Nikamji, please introduce our past president, sir, G Ramaswamy ji.
Thank you, Vishnu Kumar Agarwal ji. We heard from you the efforts you all are taking for the direct tax bill also, and the direct tax committee, under direct tax committee also. This year was a actually unique year when the direct tax bill 2025 was introduced, and now it's become act. I can see and I experience the direct tax committee has submitted so many suggestions, and also attended so many meetings and made CBDT understand our issues, and there are many recommendations were accepted by the CBDT, that is the achievement of our ICAI. Now I'll move on to introduce CAG Ramaswamy, sir. Sir? Yeah. I
don't.
specifically said sir because his introduction, I don't think anybody need his introduction because he's a past chairman of ICAI with very extensive career, academic career also and professional career. I'll brief everyone, just his brief introduction I'll going to present before you. CA G. Ramaswamy sir is a BCom graduate, FCA and FCS also, a former president of ICAI for the year 2011 and 12, first ICAI president from the Coimbatore, former board member of International Federation of Accountants, that is IFAC, USA 2011 to 2014. He is a fellow member of ICAI, ICSI, honorary member of AIA UK, Institute of Chartered Accountants of Australia, certified public accountant of Australia, resolution professional, IBBI and IPA, ICAI, member of Company Law Committee, MCA, chairman advisory committee, IIIPA of ICAI, member quality review board, Actuaries Act, Government of India. His key leadership roles are at ICAI President for the year 2011-12, Vice President of ICAI for the 10-11, Council Member of ICAI for the year 2004 to 2013, chaired major committees of Executive Committee, Examination Committee, Finance Committee, Disciplinary Committee, Editorial Committee, International Affairs Committee, Public Interest Committee, Vision and
Right,
Planning
sir.
Committee, ICAI, ICWAI, ICSI Coordination Committee, serve across ASB, AASB, Direct Taxes, Ind AS, IT, CPE, Corporate Law, Internal Audit, International Taxation, Research, and many more. At IFCI international bodies, he was a board member of IFAC, International Federation of Accountants, for 11 to 14. Also, he was a member of CAPA. He was a member of XBR International Steering Committee, former chairman of SMP Committee of SAFA, and he also chaired many government regulatory and public sector committees also. He was
Thank you,
member
sir.
of Corporate Governance Policy Committee of MCA, so special envoy of
Thank you very much.
NACAS. Sir, it is very exhaustive. I can see your
I know.
biodata contains around 5 pages. So it is very difficult for me. I just running through the biodata.
Yes,
Please pardon me
G.
if I
Ram
miss
Swami, that's
something.
all enough.
He was chairman of SIRC,
Thank you, sir.
chairman of Coimbatore branch of ICI, SICASA chairman also. He's practicing as a chartered accountant since 1984. Many of were not born. You are practicing since
Right,
like,
sir.
I think, 40 years.
Thank you.
His
Thank you.
specializations are in taxation, company audit, representation before IT and appellate authority. I can
Right, sir.
say
Thank
there
you.
can't be a suitable faculty or expert on this topic like investigation and assessment. So, sir, we are going to learn from you today, and
Thank
forum
you.
is open for your sharing your wisdom
Thank
and
you very much.
deliberation.
Thank you. Thank you.
Also, I recognize the presence of a senior chartered accountant, CA Ramchandran ji. He is a
Ramakrishna.
senior practicing chartered accountant with extensive experience in direct taxation. He is known for his deep technical expertise and practical approach to complex tax matters. So, sir, forum is open for both of you, sir.
Thank you. Very dear Chairman of the Direct Tax Committee, my former president, when I was the chairman, he was the president of the Institute of Chartered Accountants, Mr. Our SP Chatterjee's son, CA Piyush Chatterjee, and my good friend and the former chairman of the WARC, the current vice chairman of the Direct Tax Committee, Vishnu Agarwalji, and regional council member Sanjay Nigamji, and my good friend from Chennai, Mr. Ramakrishnan. I just called him to join this wonderful program organized by the Direct Tax Committee of the ICI. He readily agreed without any hesitation in spite of his various busy work, and he is always supporting the institute, participating in the institute matters, and also representing various forums relating to tax matters. And he is a very knowledgeable person. My thanks to him personally for his immediate acceptance, Mr. Ramakrishnan ji, for this wonderful opportunity. And also I must thank the institute and for this opportunity they have given me to participate this evening program. My compliments to the chairman and vice chairman of the Direct Tax Committee and also the Direct Tax Committee chairman of WIRC. Wonderfully, they are organizing every week, Thursday. It's a very good initiative you have taken for spreading the knowledge among all the members. It will be very difficult everyone to participate physically in everywhere. And at least this webinars will helpful to the many youngsters, all even senior members can interact with each other. They can share their ideas, their views, so that everybody will get good knowledge about this taxation. Especially, now that their initiative they have started for the Income Tax Act 2025 for along with the Central Board of Direct Taxes, it's a good initiatives. When I was the Fiscal Law Committee Chairman of the ICI, at that time Mr. Sunil Talati was the President of the Institute of Chartered Accountants of India. The first time the e-filing initiative started by the Central Board of Direct Taxes. Myself, the former Joint Secretary and the member policy of CBDD, Mr. Arvind Modi, we joined together. We addressed through the Doordarshan and we explained the importance of the e-filing at that time. Almost we have crossed many years for the compliances relating to the filing of a return and taking the technology into the important area of tax compliances and providing support to the entire citizen to file their return without any difficulty. Based on that continuous innovations and continuous imbibing the technology, the Government of India, especially the Finance Ministry, is providing a great service to the taxpayers. We must appreciate the initiative taken by the Central Board of Directors and the Finance Ministry for the wonderful initiative for filing of a return, helping the senior citizen and getting the refunds immediately from the various forums, those who are filing the returns in time. That's a very important concept which they have developed. The tax reforms is always necessary for the tax compliances. Our country is a large populations with a very minimum number of people are filing their returns. On the basis of the filing the returns, they're expecting certain type of statutorily they want some a support from the government. The charter for the taxpayers, government come out with the charter for the taxpayers. That is also a wonderful initiative. Now, if you are not able to get any refund, you file your grievances. Immediately, it will be addressed by the ministry for these matters. I must compliment the entire team of ICA under the chairmanship, presidentship of Mr. Charanjot Singh Nanda. They are creating a complete and innovative path towards bringing the citizens, taxpayers, all stakeholders together to making this government to understand our views and as well as their views to entirely the concept of intellectually integrating all the field with the institute. I must compliment for the entire team of the council members and the president for these wonderful initiatives. Friends, we have seen that number of investigations now started on a various aspects, especially started with a small way of survey and search, and later on it has started with an implementation of technology. The awareness about this requirement of filing of a return, awareness about if you miss something, you can file an updated returns, awareness about all your purchase sales you have made on a particular manner through the TDS provisions, the continuously monitoring the transactions, and all these things are happening. During the demonetization, the government has come out with the levy of tax at the rate of 60% for the undisclosed income, unexplained income, all these things it has come with a heavy penalty 100 BBE. So a lot of things have happened in this government side. Next tax reforms they have stated with the Vivad Se Vishwas scheme in 2020, Vivad Se Vishwas scheme in 2024, but providing citizens, those who are in the filing the writ petition, those who are filed in their appeals, those who are not able to pursue in a matter in time. So they have given a window of come and clean yourself by filing your Vivad Se Vishwas petitions and applications so that you will not be subject to penalty, you should not be subject to payment of interest and all these things. Many of them are used. My humble request to the chairman of the Direct Tax Committee and the institute. Now we are in the transition period of Income Tax Act 1961 to Income Tax 2025 on 1st April 2026 onwards. There is a very small gap period is there. Budget is going to be presented in the month of February. 1st February, government is going to present the budget. We are expecting large number of initiative for ease of doing business. The government will come with a number of changes. So we are expecting that tax reforms will continue. But in this process, if the number of cases pending on various appeals or various forums can be considered as the one more Vivad Se Vishwas scheme, wherein first time in 2020 they have included all the such cases also in the Vivad Se Vishwas scheme, but subsequently Vivad Se Vishwas scheme 2024 such cases has been not included. Today, the block assessment concept is coming in with the simple 60% tax rate. If you are comply with that based on the whatever the investigation authorities found out based on your own wisdom, if you are able to file the entire undisclosed income by filing a return, your tax liability is only 60% instead of going for all other for levy of penalty, interest, so many other things are going to be changed. There is no, even now that surcharge has not been prescribed. So there is one window open for the purpose of filing their returns and clean themselves from all the hassles of going for filing the appeal or disputing, or maybe are going before or any prosecution, facing all these things, sir. And we must see that there was a settlement commission was there. The Vanju committee, very long back, they have given us suggestions. There should be a window open for those who have filed the return wrongly, or those who have search has been conducted by the department on various aspects. And if they found is in undisclosed income, undisclosed asset, all these things, there will be a window. There was an window was opened for them to go before the settlement commission, file their applications, clean themselves. That was the window open. Now it is more or less the block assessment of the new concept is more or less it's a window open for the people to go and surrender before the income tax authorities by filing the true income after the investigations. They may be able to get out of all the problems of prosecutions, penalties, so many things are there. That's one window is open. Now this Income Tax Act 1961 has come out with completely that they reformed into Income Tax 2025, wherein the large number of provisions removed, notwithstanding anything contained removed, explanations removed. A simple form of Income Tax Act 2025 is before us. Today we are all in the 4th December. So December, January, February, March, 4 months are open to us. 1st April 2026 onwards, the new act will come to play. It is a time for the Institute of Chartered Accountants of India, especially the Direct Tax Committee. Form yourself a debate on that. What type of a transition we can give? It's true that government is requesting the Institute of Chartered Accountants of India to be a partner for nation building and to be a partner for creating the new provisions relating to new rules and regulations to apply and implement the taxation's law. So in this process, that also can be considered by the Institute for proactive method. Proactively can work with the government for bringing the tax reform is one of the very important tax reform through this Income Tax Act 2025. Friends, and I must compliment to all of you. You are always doing good job for the Institute, and it will be you are inviting all of us. And it's in fact, I was the president 2011-12. I am constantly working with the Institute on various aspects. I was their company law committee member when the government has decided to come out with the simplifications or decriminalization of the Companies Act. It has completed, amendment was happened in that. So like that, there may be a certain decriminalizations also required in the Income Tax Act, which also we can give suggestions. Coming to the topic relating to the emerging trends in the investigations. The emerging trends in the investigation is a number of changes happened in the Income Tax Act. Maybe the methodology of approaching the verification of documents, assessment procedures, levy of penalties, and other acts which are all coming into the handy with the Income Tax Department. For example, the Black Money Act, disclosure of the foreign assets. Even now, the government is coming with a number of messages to the people, common people, saying that if you are not disclosed your foreign assets, if you are a resident of India, if you are not disclosed your foreign asset, please kindly disclose it by filing your revised return before 31st December. Every year, this message is going to the common people to understand if they are failed, either genuinely or voluntarily, whatever may be, that one more opportunity for them to correct it. In case if they fail, they have to face the lot of consequences. Similarly, the interplay between the Benami Transaction Act and the Income Tax is also very important one. And we have a PMLA. It's another act where there will be also an interplay between the income tax and the other act. So there are a lot of draconian provisions are there, wherein if they are failed to consider other acts, the assessees are facing the biggest problem. As a chartered accountant, we have a knowledge about the other provisions relating to Benami Transaction, Black Money Act, or PMLA, all these things. Beyond that, we have to see that how this interplay between these income tax and other investigations are to be considered for the purpose of providing a good service to the citizens by enabling them to comply with the law. That is our duty and responsibility. So I would like to highlight some few points with me, and I will just present my the one PPT. Then later on we can have an interaction with Mr. Ramakrishnan. He's also have a suggestive view on certain suggestion. We can share all of us, so that we can get the more and question answers, which we can answer them to the best possible within the time allowed. Let me start with this presentation. What is happening today? Complete digital revolution in tax enforcement. You have seen that number of times the Madam Finance Minister has announced in the Parliament. The WhatsApps, your social media, your disclosure, so many things are all becoming evidence. There are a number of issues raised before the various court earlier. They said certain matters are not to be considered for the purpose of investigation, not a valid evidences. Today, the tax investigations are totally changed. The traditional method of physical raids and manual scrutiny. This is the traditional method. Maybe on extreme places, they can go for a physical raid and manual scrutiny. And other way, they have taken all the digital tools they are using. Robust statutory reforms, AI-led analyticals are available. The developments are not only enhancing the compliances, but also establishing a new paradigm tax administration, characterized transparency, efficiency, and technological sophistications. That is the fundamental rule now the government coming out with. Transparency, efficiency, and technological sophistication. You see that you are getting all your AS, TAS, AS, all these informations are coming in your handy. You are able to understand how many bank accounts are maintained by your client. What type of transactions are happened during that particular financial year. Pre-filled forms are available. We are uploading our tax audit reports. The related parties transaction like 48(2)B, compared with your AS 18, compared with the related party transaction disclosed under the Companies Act. All these things now easily available in the Income Tax Department for the purpose of verification and investigations. That is an important area which we have interplay between the Companies Act, tax audit reports by the chartered accountants, and the regular methodologies adopted by the filing of your SFTs. Also to be considered for the purpose of tax revolution in the tax enforcement. Maybe we can say that income tax bill, I have mentioned the Income Tax Act 2025, undergoing overall changes and replacing this Income Tax Act. There are a number of evidences which we are going to consider for the purpose of this particularly Income Tax Act 2025. We have seen that very recently, the large-scale operation against the fake deductions. For example, the government has identified number of people has filed their income tax return by filing fake deductions. Maybe donations, maybe our ATG, maybe our all these things. Recently, about 3 months back, the entire Income Tax Department nationwide, they have completely made a searches. They found out political donation, tuition fees, medical exemptions, many of them are wrongly claimed it. Without discussions with the proper professional advice. Based on the wrong advices, many of them filed, but knowingly they filed all these cases as a deductions. Unfortunately, some of them have filed their updated return before the deductions, they were able to escape. Others are all completely under the process of prosecutions, levy of penalty, and all these things. So that is an intelligence with sophisticated knowledge tool they were able to identify. That means anybody is going to file the return, they should file the return perfectly with the knowledge and understanding of the tax laws, then only they can able to get out of the problems. So that means the investigation on a different prospects have started with the intelligent tools by the department. The revamp of this I just touch upon this revamp of the Income Tax Act 1961, the language or simplification, digital infrastructure focus. The Income Tax Act now 2025 is completely digital infrastructure focus. Enhanced provisions relating to digital record keeping, electronic compliances mechanism, and automated processing system integrated throughout the legislations. So you see that the new Income Tax Act is covering all these provisions. So there is a need for understanding this new provisions. And what are the key changes they have come with the reforms? For example, Aadhaar PAN integration. It is a universal linking of Aadhaar PAN integrations create unified identification system, wherein lot of transactions which you are using your Aadhaar or PAN, it can be integrated. Similarly, statement of financial transaction reporting, it is also in another area where they are going to call out many informations and use for the verification purposes, investigation purposes. Then revised TDS and TCS form sections. There will be disclosures about TDS. Many things are happening based on the TDS. For example, the purchases, maybe on your limited 194Q, there may be 0.1% you have to deduct, but it has been covered under the verification purposes, and enforcement of authorities, sometimes they use it for the purpose of an enabling for an investigation purposes also. Similarly, the assessment concept, physical verification of the assessment concept has gone. Now we are in the faceless procedures. In the faceless procedures, everything transparent. You are not aware of who is sitting outside. You are going to file your return. Faceless assessment will be picked up by the department based on the return filed, based on certain criteria, risk-based methodology they are used, AI tool-based methodology they used, they have taken for the purpose of verifications. Once it is their verification started, there are a number of methodology they are used for the purpose of identifying the investigation, which area to be investigated thoroughly, which area required to be ignored. So all these things are happening in the case of a faceless procedures. Deduction and crackdown. What we have seen that many places wrong deductions completely cracked down by the income tax department by using sophisticated tools. So what is the view of the government? Government has mentioned to this, relied on all the taxpayers. They said we are relying all the taxpayers are filing the correct return. So for that they have started the principle, trust first, scrutiny later. That is the principle. You are trusting that all the taxpayers. So they are asking them, we are not going to scrutiny if you disclose everything. So there is an AI-based compliance nudges. That's an automated system generated, personalized notification, encouraging the taxpayers to file the revised return when their discrepancy is deducted, promoting voluntary compliances for before formal proceedings. That means if you are wrongly you filed any return, you have a right to file your updated return. There will be an escape. You can escape from all the assessee can escape from all these problems. That is an area where there will be a voluntary compliances, enforcement, investigation, all of them coming before the person. Either you file an updated return, avoid all prosecutions, penalties, all these things. If you're not complying with that, automatically the investigation process will take care all the work. So there is another method of investigations. How that emerging investigation started. Updated ITR forms now is mandated comprehensive documentations. In the filing of a return, you have an insurance policy number with an issue information, housing loan account numbers with the lender detail, investment certificates, fund, house details, house particulars, etc. Like that, more and more information has been fed into the completed in the ITR form. We are filing with the details. These can be validated automatically. In case if there is a wrong statement, it will be automatically picked up for the purpose of investigation by the department. So the campaign line, then there will be a complete, the department started with systematic approach for the programs. They have started with the campaigning for all these things, extended return for windows, fake deductions can be deducted, and AI driven niche campaign is success. There are about 11 million updated return filed. since 2022. It should maybe in further must have been filed. Then additional tax collection about 11,000 crore they have collected. That means the AI-driven technology is going to take care of all investigations. Similarly, in case of like a faceless assessment, they have launched that faceless appeal also, where there will be a complete transparency. You need not go to the income tax department, stand for a long time. You just file the details. In the case of faceless assessment, all the units are maybe a valuation unit, verification unit, assessment unit, joined together, they have come out with the final assessment. You have a right to file an appeal before the faceless authorities. The commissioner appeals also now in faceless appeals. Key factors for faceless proceeding: elimination of human interactions, randomized case allocations, automated decision making, digital communication. The digital communications can be easily checked by any authorities. For example, if there is a loan from borrowings from various persons, it can be easily, they can verify with sending the notices under section 131A, they can collect the informations. This is a very important area where the faceless assessment, through that they are started investigations. Then pending appeals. I have seen that, of course, there are a number of faceless assessment. There are compliances are there. There may not be a compliances. There are a number of cases are pending. There is about the September 24, it was there about 5.49 lakhs of applications pending. Now it must be reduced about 5.39. Maybe about 18.16 lakhs amounts involved for a pending appeals. Now it has been about 16.6 lakhs of the amount involved in this case of a pending appeals. Because the law is amended, earlier the CAT appeal has no power to remit back the set aside all the cases. Why these so much of cases are pending? Because the faceless assessment proceedings, there is a standard operating procedures. They have to issue notices, call for the details, verifications. Then many cases, the emails are not properly structured by the taxpayers. Maybe emails are not with them, emails maybe with the other tax person, consultant, maybe with their other management, the managers, all of them. Many of them are not able to access their email. We have sent the number of cases, deposit in the banks, the huge amount deposited, withdrawn, all these things identified because of the TDS has happened. So naturally that has been reported and cases have been taken for a scrutiny. Many of them not able to represent. So there is a standard operating procedure started by the faceless authorities by providing the opportunities, sending the notices by way of a postal method. All these things they have sent. Then in spite of that, they have not complied with that. Based on that, the amendment has happened in the Income Tax Act that in case of the authorities like our CAT appeals, and they have added Joint Commissioner appeals also, they have a power to set aside the cases for a proper compliances. Naturally, the initial stage of this faceless assessment, number of cases they are not able to dispose it of because of the non-compliances. The law has completely put a limitation period. Within the limitation period, many of them are not complied with that. Because of that, matter has been completed by the faceless authorities and some of them are filed an appeal, some of them are not able to file the appeal. Matters went for a writ petitions, matters are filed by the appeals are pending. Maybe the government can take a new process of disposing of all these appeals as early as possible before the new law to come into play. So extended, I have mentioned penalty proceedings also now faceless. Joint Commissioner appeals also is appointed to making the speedy process. So communication challenges, which I have mentioned that there will be a missing crucial notices. Now there is the government is taking number of initiatives. But what is today's the concept of how these investigations are happening? Many times the faceless assessment, the details filed can be compared with maybe they can take the copies from the other authorities, other persons. They can get the investigation started. So the current investigation process, merely filing your details and through the faceless website, faceless portal is not enough. You should have a proper investigation you should done before filing all the details, because many times all these cases will be without the knowledge of the assessee will be verified by the faceless authorities. That is also we have to keep it in mind. This is the new methodology for them. In case if there is a credit verification, they can send the notice independently, they can collect information. If there is a verification of the share money, application money has been issued in this year, they can verify. How many of them have mentioned that? The cash transaction can be verified by sending the notice to the persons also. In this process of sending notices, some of the property purchases, maybe that purchaser may not aware of all these things, or seller may not aware of that. So many things are happening. Because the SFTs are given in somebody's name, that person notices if he goes there, somebody may not know whether the property is purchased in his name or not. So a lot of issues are coming out of that. And because of these sales or the details they have filed, the cash deposited in the banks, maybe that prevention of money laundering also may be come into play for the purpose of an inquiry. Binomy transaction may come to a purpose of an inquiry. All these things are all now the new concept of investigation started in the income tax department. Of course, now that SFT reporting category is also important, credit card payment, time deposit, securities, shares buyback, all these things are available in your AAS and TAS. But in spite of that, many things we are not able to identify. So these are the areas our investigation started specifically on immovable properties. For example, an Indian resident is purchasing a property in outside India. Many investigations started. For example, people are purchased properties in Dubai. Investigation started in the form of money gone outside from India to an outside for an investment purposes, compliance with the FEMA laws, compliance with the prevention of money laundering, compliance with investment requirement, all the compliances. So naturally, so many things are coming out. This is coming under the investigation process by the income tax department. So now annual information statement, information summary serve as a single window for all SFT statements, etc. TDS are available for the income tax department. This is an easy way of they are doing all the investigation, including section 133, 133B, 133C are available for the income tax department for probing all any transaction. They can understand whether transactions are within the law or not. I'm going to other areas. Remote verification possibilities. See the technology advancement, elimination of physical site visit in many cases, reduced verification of cost and processing times, objective evidences for assessment proceedings, and maintained accuracy and reliability of verification. This is geo-tagging properties has become integral part of verification process. For example, an assessee says, I sold my agricultural land in such an area. It's an outside the limit of the specified limit. So it is not a capital asset for the purpose of computing the capital gain. It is an exempted. Or somebody has sold certain asset and invested in again in agricultural land claiming an exemption, section 54B. So this can be verified by the faceless authorities even through their geo-tagging on the properties, whether there is an actual transaction, actual cultivations has happened or not, actual property is there or not, and all these things can be verified by the department by using these type of a remote geo-tagging methodologies that Google Maps are available for them. There is another area, Project Insight, data analytical revolution. So you can see that Insight portal. Many times the Insight portal, they've asked for whether you have invested in so much of deposit in that. There is an answer should be given by the assessee. If their answer is not there, then there will be a chance for them, it will be taken for investigation purposes. So data referencing multiple data sources, including banks, stock exchanges, property investment firms are systematically compared with the filed returns. Discrepancies in deductions. Advanced algorithms identify inconsistency between the declared financial activities, priorities cases are deduction, detailed examinations. Compliance enhancement, analytical driven insight, improve the voluntary compliances, behavior analysis, tracking of taxpayers' behavior, patterns, trends of predicting the maybe the potential tax evasion schemes and all these things they were able to identify. Systematic borrowing, systematic withdrawal, systematic payment, systematic, all these things are maybe automatically identified. The department can take it for the purpose of investigations. The fair tax collection is to be ensured, evasion to be reduced, resource enforcement. This is the fundamental principles of investigations. The CBDT has inserted a Rule 13 establishing procedural requirement of properties valuation references. Sometimes they have to do valuation also. There will be the valuer has to give Form 6A requirement, property identification details, location discrepancies, circumstances necessitating the valuation, timeline for completions. So automatically this can be checked by using the advanced technology by the faceless authorities. Block assessment, now we have seen that originally 95, repealed in 2003, then again 224. Initially, I have mentioned that block assessment, again, there is 6 year plus a smaller period of the block period has been added for a compartment of a block period. So there is a flat rate of 60%. If you're clean, you want to clean, you can clean it, you can file all the returns, avoid all the consequences. Then during that period, there will be provisional attachment. There is a mandatory sometimes now that provisional attachments are coming out. There will be a section 281B, initial period 6 months from the attachment order date, up to 2 years of total period, until 6 days of the post assessment. These are the provisional attachment. It's a new area for the purpose of, for example, a person is doing a real estate business, not disclosing the entire income. And there will be an investigation started, search conducted, survey conducted, so many things are happened. If they are able to find out any discrepancies, to that extent, they have a right to completely attach the properties disclosed by the assessee. There are a number of cases, unexplained income provision, section 68, completely now every scrutiny, section 68 or 69 and 69A, all the faceless assessment, this scrutiny is happening. In case if there is a failure to disclose or in case failure to provide all the details, there will be a levy of penalty 115B, the tax liability also of 60%. That is also to be considered. So these are all the normal investigation, but now investigation beyond. It is not merely sending a letter, filing of your confirmations. Beyond the confirmation, the department can also, as without the knowledge of the necessity, they have been able to identify and they get the informations. Like that cash transaction, many times it has been, the cash transactions are escaping from the process of assessment proceedings. Now this 216S, 216ST and all these things are automatically fetched by either through our tax audit report or through any other method of deposit in the banks and all these things. Or visibility is available and they can able to do that. There is another provisions, 271D, 271DA, all these things. Equal amount of penalty. 216ST is a 2 lakhs. You can't get money for any sales of cash by way of more than 2 lakhs rupees. If it is there, 100% will be levied. Maybe sometimes it is an extent to the gifts also. The marriage gifts and everything. We have seen that if you are disclosing that marriage gifts and everything, 271D, 270D DA also can be applicable for the purpose of a levy of penalty of 100%. So that the Finance Act 2025 is very important amendment in case of 271DA, 271E, 271D. Why there is what is happening that today the faceless assessment automatically assessment will be completed, the computation will be completed. In case if there is an addition will be notified. In the case of an addition, there will be a levy of penalty, issue of notices for non-compliances, disclosures and all these things. Then again, in the case of in the case of 271D, in case of cash received by the person more than 2 lakhs rupees, it has to go to the additional commissioner for the levy of penalty. Now that additional commissioner, it goes time. There is no time limit for a levy of penalty. It was taking number of years for levy of penalty. It may be sometimes it may be difficult for the assessor to co-opt. Maybe consider that as an easy method of filing of an appeal because of it may be coming after 3 years, 2 years. There is a lot of debates on the time limit levy of penalties under these provisions. Now this has completely now shifted to the assessing officer. So in every assessment, you can see that any assessment, regular assessment, faceless assessment, you can see that in case if there is a cash transaction are reported in the tax audit report or in the form of a deposit in the bank or in the form of a sales, all these things, if they are able to identify by filing of a details, automatically this will be levied in the faceless assessment itself, section 271DB. And one important point you must see this, all these penalties are independent of your assessment. You file an appeal is pending before the any CIT appeals or the Joint Commissioner appeals. But this levy is an independent of that. You can ask for the stay of other penalties of non-compliance or non-disclosures. But in the case of this penalties 271D, 271DA, 271E, all these things are the penalties are independent from the regular assessment. It can be levied automatically. You have to file an appeal separately. There is a separate stay proceeding, about 20% you have to pay. In the case of an appeal, you are filed. All these things are independent. Then now it is shifted to the assessing officer. So in every case, you can expect the penalty under these provisions. That's a very clear decision has come in the case of Commissioner of Income Tax versus Worldwide Township Projects Limited. It's an independent nature of cash penalty proceedings. So there is no, and then the circular also issued by the CBDD on 2016 itself. So in that process, if you are taking from the insert port where you have a portal, you have to give small answers for everything. Some message will come to you by way of mail or maybe by way of an SMS. You have deposited so much, kindly explain. You purchased so much, you kindly explain. Inside port will be there. When you go to your portal, you can identify, you can set there are e-proceedings. There will be a compliance portal will be there. So now two concepts relating to you not complying with this, you are not answered to the compliance portal. Then there is a need for reopening of your assessment in case if it is delayed. That reopening of an assessment, reassessment procedures now 148A and 148. 148A, now it's very clear. Now 148A, in case all the previous 5 years, you can be reopened now. Then 148A is the provision which before reopening that there'll be an previous authority, they have to get an approval from authorities, then issue a notice, ask for the details, and they can go for verification, they can go for a reassessment. And there is an opportunity for you to rebut. You give answers. This is not my undisclosed income. I have disclosed everything. I filed my return. You can do that. Then the 148A, they will pass the order, accept or not accept. Then it will be an assessment will be reopened or not reopened. Whereas if in the case of an inside portal, if you're not giving any answers, then automatically the 148 straight away it will be applicable. Reassessment notice, not required to give you an opportunity because the faceless methodology of getting all the information. It is like a faceless survey. So this faceless survey, they have asked you how much you money invested in time deposit. What is the amount of share investment you have done? This is the investment, true or not, you have to answer it. You're not answering, automatically 148 will come. There is no need for you to give an opportunity under section 148. So this is a method of, and another method of investigations. That's a digital information. You can see that section 135A. Whatever I have mentioned that. Comprehensive powers of electronic data, strict procedural safeguards, encrypted protocols are available, audit trials for the protect for the taxpayers' privacy. All these things are there as per 135A and 135 also you have to consider it. Of course, the survey you have seen that survey now that the survey including your digital record. Earlier, they take all the books, records, documents, including they have a power to collect all your digital records, cloud storage examinations, your documents, social media investigation. All these can be carried out in the case of a survey. Apart from this survey, there is always a condition by they will take a statement from the person on oath. It is courts have taken, you are taking a statement from a person on oath during a survey, it's not perfect. And law is amended now. They have the statement can be taken on oath. It will be valid one. In that case, if there is a statement recorded on oath, the person cannot go back from the statement which he has given unless there is a strong retraction statement. He is prepared and give the retraction within the time. So that is the one. So main facilities, that's only generally in case if there is a survey, site activities of business operations, declared storage facilities, all business branches, they will come. Only thing is the survey is include your seizure of all electronic records, your computers, your documents, and your transaction, your WhatsApp, everything they have a power to verify and take a decision on that. Entry and inspection, everything is a normal, which is a URL. Everyone knows that they have to count initially to the office hours. They can continue all the verifications. Recording of statement oath also now given. Importing of documents, including all your electronic documents. So even income tax bill, that is Income Tax Act, is given expanded digital scope. Surveys now extended beyond physical documents to cover computer systems, electronic media, virtual digital space, reflecting shift to digital records. Then authorities gain expanded power to data from electronic media, etc. So we have seen that all these things are very important document for the purpose of making an assessment. The digital evidences may be consisting of many things, including all I have already explained to all the records. And search operation also, the warrant they can give, evidence that they can evaluate, comprehensive search report, material they can seize, all these things are there. Especially the digital cryptocurrencies, digital wallets, cloud storage, social media, electronic communications. So only thing is, these are the physical verifications and the physical form of loose sheets. Many times we have seen that how these loose sheets can be considered as an evidence. How these digital materials can be considered evidence. Maybe while taking the documents in the form of a digital form, maybe they must have tampered it, they must have changed it. In the case of loose sheets or unsigned documents, what are the independent evidentiary value for the purpose of tax proceedings? Many times we have seen that in the case of a tax proceedings, whether the Evidence Act can be considered for the purpose of tax proceedings or not. That is the questions. The court have held that many times, the Supreme Court and all of them held that there should be evidentiary value for the document. But directly the Evidence Act will not be applicable in the case of a quasi-judicial proceedings. Even very recently, Madras High Court also held that in the case of a quasi-proceedings, the digital valuation, digital evidences can be as if they have acquired or seized from the department can be considered. Though there is the Evidence Act required a certificate under Section 63B, all these things are there. But that need not be followed for the purpose of tax proceedings. That means the Evidence Act is only a very, maybe not fully acceptable for the purpose of tax proceedings, maybe for the purpose of natural justice, you can consider this. Principles of natural justice should be followed in the tax proceedings. And number of times the retraction of the statement will come. Legal framework of retraction. If anybody says that, yes, this is my income, I have concealed this income, that itself is enough. Nothing is required. So sometimes, maybe out of fear, maybe out of pressure, they must have given a statement. So the retraction of the statement is also very important during the search proceedings. If you are given any wrong statement, or maybe you are not given an opportunity to verify records, though all these can be, retraction statement can be filed within the reasonable time by the taxpayer. That is very important. Once you accepted it, acceptance is an acceptance. You cannot go back the acceptance during that statements. What you have given is to be considered as the correct. So that's the case as given in 1979, the Awadh Kishore case. When a taxpayer retracts an earlier statement, the burden of proof shifts entirely to the taxpayer. This principle stems from the evidentiary weight given to the admission in legal proceedings. So the legal system recognizes the admissions are generally reliable indication of the truth placing correctly. So there'll be, when there is a retraction of the statement, there will be a very strong retraction within all the evidences, then only it will be considered as a retraction will be considered in the court of law. So corroborative evidence is required. For example, a small papers are maybe identified, loose papers are identified during the search proceedings. Naturally, there'll be they have to go for retractions, or they have to give all the details. CBDT also has given instruction, merely because of confession, don't take it as a income. You should go for elaborate investigations about the income. So there will be a mere admission is not enough. The department has to go beyond the admission. They have to identify how this income has arrived. So that electronic records under Indian Evidence Act, I have mentioned that section 65A and 65B of the Indian Evidence Act. So the law is very clear. So what is required for the department is they have to identify the electronic records and they have to keep it in a proper manner. They have to apply, they have to get the experts for the purpose of taking the digital evidences. If they followed all these procedures, the Indian Evidence Act, where 65A and 65B is not applicable for these cases. So the very important decision is there in the case of Supreme Court, very clear mentioned that exercise of the due diligence, seeking corroborative for seized materials, provide adequate opportunity for a taxpayer explaining before making adverse determinations. This is very important in case of using of all these loose seeds, electronic documents and everything. So there are a number of cases how that investigation standards are to be applied, due diligence, ITAT rulings, Supreme Court rulings, all of them given a proper advice to the department, taking a proper evaluation of the evidences. But still, it is very clear now, in the case of an income tax proceedings, we cannot consider only the Evidence Act applicable for these cases. So only in the court of law, these cases are applicable because income tax proceedings are quasi-judicial proceedings. But one section I have seen that in case of a search cases, number of assets they have seized. Maybe some of them are mentioned. Say, for example, somebody has purchased a house for about 2 crore, but there may be a loose seat. It has been mentioned about 3 crore. The department is taken as a 3 crore as a value. But there is section 132(99)(d) and also is very clear. Specific provision for determining fair market value of a seized assets using registered valuer's report, comparable market price, expert opinion. So in such cases, it is a taxpayer when there is a opinion between the search assess the search group saying that we have seized a loose seat wherein you have mentioned only your house property for 3 crore, whereas you are registered for 2 crore, there may be an on money of 1 crore will be there. So in that case, if an assessee taxpayer feels that it is not correct, maybe the loose seat is not properly drawn by him, and if he want to object it, he has to use section 132(9)(d), request the search party to refer to the valuations. This is also very important for that. So friends, all this search process, you must have seen that many times investigation process, black money, undisclosed foreign income and assets. That is the provision is now it's coming to play. Well, because there is a mandate requirement of disclosing of foreign asset by the taxpayer if he is a resident or if a non-resident coming back to India, settle down and his status change it as the non-resident. Even though he is maybe a citizen of USA, citizen of UK, but if the status according to the Income Tax Act, if he is a resident, automatically all the foreign asset has to be disclosed by him. Otherwise, there will be a undisclosed foreign income assets comes about 300% of your penalty and your levy of your tax. And if it is the exceeding 20 lakhs rupees, 10 lakhs rupees fine will be there, and inaccurate disclosures, other defaults will come into play. This is the new area where the Income Tax Department has a separate investigation authorities. They are asking for the details from the various assessees. Even now they are coming out with the various informations to the assessees openly or publicly. They are giving a statement stating that those who have not disclosed your foreign assets, kindly disclosed by filing the revised returns. So that's started in the 2015-16 onwards. The notice section 10 they will issue. Authorities or the department they are asking for the details. We had to file all the details. There was based on the deduction they have in the 2014. Since 2014 there was a 80,000 crores they have given a deductions. They have a Panama Paradise papers that comes about 20,300 crores, 8,462 crores from HBSC account. All this is in the public domain. You can see that how the Black Money Act has deducted so much of non-disclosures. It's a very draconian provisions. You must comply with that. Otherwise, there will be a lot of problems in the case of non-compliances. And there is a Benami transaction. There is a Benami transaction. Now you see that 2015, this black money transactions and disclosure, Benami transactions comes with a lot of amendment stating that if somebody has purchased the property using their money in someone's name for his benefit, that is the principles of Benami transactions. So there will be they're able to get all this information, technology driven details, professional. We have to identify whether the transactions are properly disclosed by the SSE, the transactions and purchase of the properties to be identified, and we have to advise them not to indulge any Benami transactions. So friends, these are the major items. I feel that the Benami transactions, there are certain exemptions for purchasing of property by the by the Karta for the benefit of the members. Brothers and sisters are purchasing property. Only condition there should be in the joint name, and the lenient descendant, ascendant, they are purchasing property jointly. These are certain exemptions are there. Otherwise, property will be seized by the government, and there will be a prosecution, there will be a penalty also. So these are the major areas which I would like to highlight about the investigation in the case of a Benami transaction, investigation in the case of the Black Money Act transactions, investigations, and search and seizure investigation, disclosures, retractions, and the electronic data and the loose seats, WhatsApps, all these things now that in the hands of the department. And the information technology has been modified, enter into your privacy. A lot of things have happened in the 2025. So all these things now, more and more awareness about the functioning of an individuals and transaction of the individual, disclosure in the social media, and disclosure in your income tax return, disclosure with other your friends. So all these things are there. So there will be always another person is, unknown person is watching you, all your transactions. Be transparent. Use all your techniques of giving a transparent disclosures. File your return with a proper consultancy. That is very important. Anybody can go and discuss with your Google are giving, maybe our artificial intelligence or number of artificial intelligence are giving you suggestions. And these are all only helpful to you to understand what are the law, what are the things that are available. But as a chartered accountant, when we are facing such type of a problem, what type of a investigation, what are the provisions are applicable, which section is going to have an interplay with black money, which section is going to interplay with the Benami transaction, which transaction is going to be with the PMLA. When there is a PMLA, it's a mandatory requirement for a chartered accountant to disclose it as early as possible. These are the things which I would like to highlight. I have a wonderful friend, Mr. Ramakrishnan. He is having a vast experience relating to the Benami transactions, PMLA, as well as all the settlement cases, so many things. I request Mr. Ramakrishnan to give your views on this aspect relating to investigations, emerging investigation, all these things. Thank you one and all for your patient hearing.
We invite Ramakrishnan sir to elaborate and disseminate knowledge with our members. Over to you, Ramakrishnan sir.
Good evening, all. I thank WIRC for this opportunity, and past President Sri G. Ramaswamy for giving me this opportunity. The present digital world has made quite a bit of things which otherwise would go unnoticed. Entire 360-degree profiling has been done by the tax department, and there is also data sharing by various agencies within India and outside India. Multiple sources like the SFTs and various reporting requirements by the international frameworks like automatic exchange of information or and the common reporting standards and FATCA. All these have enabled a deep dive data source for the Government of India to have a 360-degree profile of what investments or transactions every person is doing, including the virtual digital assets as well. So this compliance requirements in this kind of a scenario requires the chartered accountants also to go through various source documents which the is available by way of TIS or AAS or 26As all these would be giving various data within the transactions within India. And with the if the taxpayer for whom the services are being done is a non-resident or a person who's returning or who's made investments outside India, we will have to see whether the compliance of Schedule FA specifically, because that is more draconian, the consequences of that would trigger the Black Money Act. So the compliance under the Income Tax Act is also having implications or interplay with the Black Money Act wherever a transaction of a foreign income or a foreign asset is not disclosed properly or is not disclosed at all. So, and the Black Money Act in turn, if a prosecution is launched, would trigger a Prevention of Money Laundering Act prosecution, so bringing in the interplay between the Income Tax Act, Black Money Act, and the PMLA. Similarly, any kind of addition under Section 68 to 69C of the present Income Tax Act 1961 can give rise to a proceeding under the Prohibition of Benami Transactions Act, because for the Benami Transactions Prohibition Act, the source and the manner in which the asset is acquired is to be made very clear. As the earlier speaker had elaborated, when you buy a property in your spouse name or in your child's name, that is covered by the exemption under the Prohibition of Benami Act. However, if the property is bought in the by the son in the name of the father or mother, or in the name of any lineal ascendant or brothers, sisters, or those kinds, it should be in the joint names by the person providing the funds. So this is one aspect which has to be looked into when you are advising your clients, because when a property is being purchased by the taxpayer in the name of his mother or brother, it should be in the joint names. Otherwise, the Benami Act would get triggered, or the money should be given to the other person for them to make the purchase. So those kind of nitty-gritties are there where the interplay between the Income Tax Act and the Benami Act would come into play. So similarly, the issues of the undisclosed or unexplained investments or unexplained expenditure can give rise to a Benami proceeding, because under the Benami proceeding, you have 4 classifications of transactions. One is where the consideration is provided by one person and the property is purchased in the name of another person, which is not covered by the exceptions. The next case where it would attract the Benami transaction is where the person, the owner is not traceable, or who's provided the consideration is not traceable, or if the Benamidar is a fictitious person and a non-existent person. So we have all these kind of transactions which would attract basically the 68 to 69C under the Income Tax Act, automatically giving rise to the Benami proceedings. So this is one aspect which we should ensure that there is proper disclosure and it doesn't attract the rigors of the present 68, especially after the amendment, where we'll have to provide the source of the person providing us the loan or the capital. So that has to be kept as practice notes, so that any question that can come up during the assessments can be explained. And the present search and seizure manual has been modified or has been drastically updated, replaced by the present 2025 manual, where it has highlighted various digital data to be considered for assessments, like the cloud data and various other aspects of the data storage. The only protection that is given is it has to pass through the chain of custody, the documentation. That is very essential. So which can is the only protection that is given to the taxpayer to question the chain of custody, to go through the chain of custody by the department after the seizure of the electronic device and the digital record. So This is one aspect that has which is coming to the rescue of the taxpayers, because of late the courts are also recognizing, though the erstwhile Evidence Act and the present Bharatiya Sakshya Adhinam is not strictly to be followed for the quasi-judicial authorities, but there are various safeguards that are inbuilt with the 65A and 65B of the Information Technology Act, which gives this chain of custody documentation. Recently, the Madras High Court, in the case of one Saravana Selvaratnam Retails, has come very heavily on the department for not following the Digital Evidence Investigation Manual, which has been released by the CBDT, saying that the manual is an instruction by the CBDT and it has to be followed by the CBDT in word and spirit and cannot take umbrage on the general exemptions. So the for the practice notes for the chartered accountants at large is where the Schedule FA, which is gaining quite prominence because government is had launched Nudge 1.0 last year, and now it's launched Nudge 2.0, giving information to the potential people who have not complied, in their opinion, asking them to comply by filing the revised returns. Now the time for filing the revised returns is also quite shortened, and the people who have complied by filing the revised returns are not visited with notices under the Black Money Act, especially when they have not complied with the Schedule FA. So now we are like the taxpayers are actually like the fish in the fish bowl, which can be watched by everybody outside, but the fish may not know that it is being watched. Therefore, we as the advisors for the taxpayers should be able to guide them to make them comply with all the legislations, because the consequences are quite draconian and can impact their businesses, and their future in litigation would be making their life uncertain. With these words, I would complete. Thank you for this opportunity.
4:17 p.m.
Thank you so much, Ramakrishnan ji, for your in-depth analysis of the situation and also guiding our members on critical issues. Sir, Ramaswamy
Yes.
sir and Ramakrishnan sir and also Piyush Chhajed sir, one request to all of you that there are some questions members have raised, and though it is virtual, people are interacting with us through virtual mode. So there are
Okay.
a few questions. I would like to present those questions to all of you, and please guide our members. First question is from Subrato Das Gupta, Kolkata. He's asking, need to understand better approach on notices under Section 132 of Income Tax Act. So Ramaswamy sir, can you put some light? It is general question.
Please notice.
Need to understand better and appropriate response to the notices under 132 of Income Tax Act.
132 is an old act, new act.
It
The
is not
132 is a
specified.
search and seizure.
Powers of search and seizure.
Maybe 133(6), maybe he might be asking for.
No, because 133(6) they are getting from the various faceless assessment authorities, they are sending in notices. Maybe somebody must have given a loan to X. X case must have been taken for scrutiny. Whether the loan has been correct or not, you are given correct or not, they must have asked. And internally, their verification unit must have sent the other person, whether you have given a loan to him or not. So in that other person, if it's not recorded in books of account, this loan become as an undisclosed income for him. So naturally now Mr. Ramakrishnan has very rightly pointed, if it is a person says, I don't have an asset to give him a loan, the Benami transaction also can come into play in this.
Perfectly right, sir. If the question would be, could be answered in well manner, if it is properly explained and elaborated question is there, our dignitaries would be more than happy to answer your all queries. Next question is for Chhajed sir. Sir, in case UDIN was not utilized and couldn't be revoked due to inadvertently, then whether limit will be reduced for UDIN in case of tax audit under section 44AB bracket small a.
So the question is that he has generated an unit, but it could not be utilized. That means he has not conducted an audit technically. So now what is happening is you have to conduct and carry out limit is of 60 and signing. So under an impression that you will sign a tax audit report, I presume that he has generated an unit and ultimately he did not issue that tax audit report or he did not sign that tax audit report. So obviously it's the limits of 60 is carrying and signing. So if he has carried out but he has not signed it, then obviously his limit should technically, as per the notification, should not be reduced. It should be given as 59. A very important issue you have raised. In fact, when we are making a schema, let us take an example. But then you should have immediately revoked it, because if you are not revoking, now of course I can understand as per notification, if you are not utilized technically, your limit should not have been counted 60. But the UDIN system will not do it like that unless you revoke it. If you revoke, then you're again that limit would be available and you would be generated. One more UDIN could have been generated. So you should be very careful. If UDIN is generated and if it is not utilized, please revoke within the time prescribed available to you. Otherwise, a very special case, if one feels that I've done actually a 59 audit and UDIN generation was a great mistake, we may have to consider that separately and you may have to write it that actually I've done a 59, I should be allowed to do a 60, otherwise system may not allow it.
Perfectly answered, sir. And this question was addressed to right person who is technically sound enough to guide us. And there are many such questions on UDIN also, sir. Now we'll move on to the next question. This question is from Dilip Singh Yadavji from Jaipur. Sir, can tax authorities carry out investigation at any time at their will, or they must hold substantial evidence for starting any investigation? This question is for both of you, Ramakrishnan sir and Ramaswamy sir.
Yes, Ramakrishnan sir.
You don't have to have strict evidence. Only if you have a reason to believe, you can start the investigation. For example, if a purchase of a property is being reported in an SFT and the income profile doesn't match with that kind of an investment, they can start by reopening the assessment by giving you a notice under 148A. If you respond with the necessary evidence that it has been purchased with a loan or whatever source, it can be explained. If the officer is satisfied, it gets dropped at that stage itself, or it would proceed with a full-fledged reassessment proceedings if the officer is not satisfied. So basically, the reason should believe is the basis. He needn't have an 100% proof as to that there has been a tax evasion.
No, in fact, the income tax department has so many avenues before them to identify the tax evasion. For example, if there is a regular non-filer of a return, there is a reason to believe there exists money, bullion, jewelry, and other valuable assets, and he will not file the return even if you notice if there is a reason to believe. Section 132 is very clear on these aspects. All these conditions are there. Then automatically you'd be the triggering of issuing of warrant with the permission of the competent authority. They can enter, they can do all the investigations. But whereas in the case of e-portals, if you go to the e-portals, section 135, 135A into the old act, if you see that invested a property for about, your return may be about, you disclosed for about 1 crore rupees property, there may be a e-portal, they must have said that based on the SFT filing and e-portal, they must have raised the point. It is a faceless survey. So in the e-portal, we have to answer that. If an assessee answered that, later on they can issue 148A. If you not answer that within the prescribed time, straight away 148 notice can be issued, assessment can be carried out in case regular method. Otherwise, there will be a section 132 can be put into place in case if there is a reason to believe there exists a money, bullion, jewelry and other valuable assets are available with the SSC. Or he is not filed the return, even if issued a notice on 42(1), he is never complied or not going to comply.
Fine, sir. Fine, sir. So there is one more question. Sir, is there any time limit for deciding the faceless appeals, or it can be kept pending indefinitely?
I think with your permission, I'll just answer this.
Yes, I know.
There is actually 293 commissioners in the commissioner appeals in the faceless regime, and about 100 JCIT are additional commissioners. As Sri Ramaswamy ji had stated, the 2024 September statistics is about 5.49 lakh appeals. The current stage is it is just touching 6 lakh appeals. So the target given to the commissioner appeals as well as the JCIT appeals is roughly 500 appeals per annum, which would translate roughly to 6 lakh appeals per annum. Out of 6 lakh, 1 lakh 50. So the existing burden will take at least 4 years. So we are hoping that the government can or may come up with another Vivad Se Vishwas kind of schemes, because now the objective is to reduce the number of appeals and garner the tax that is stuck in this kind of litigation, especially the CIT appeals. Because the number of appeals have reduced in the ITAT stage and also before the high courts because of the enhancement of the tax effect that has been brought by this government initiatives. So the only bottleneck that is there is the CIT appeals. And now the CBDT Action Plan 2025 has also come, where the CIT appeals before March 26 have to dispose of all the appeals which are filed before 2020. So the thrust is given for them to dispose of all the old appeals. And if there's going to be no response after 1 or 2 opportunities, the appeals will be disposed based on the material that is on record. So that is the kind of thrust the government is now taken to ease the bottleneck at the CIT appeals.
In fact, this the law has now amended. CIT appeals, they have given a power to set aside all the assessments. Because number of cases, the non-compliance with the notices issued through email, because of emails are not verified by them, emails gone to a third person, an accountant not connected with that. So merely because they have deposited the money in a bank. For example, a person may have a small business. He must have regularly depositing in the cash, and it may go to a purchasing of a cloth or something. There may be a number of cases are like that. So one side there is an investment by way of a cash by collecting money. The other side he is sending a money by way of a transfer, bank transfer. So genuine business. But unfortunately, the notices issued through email, they're not being identified by the assessee. Maybe there may be a part-time accountant or part-time person must have been there. So huge additions like 1 crore, 2 crore, they have made an addition, huge penalties have been levied. Matters, maybe they must have reached this information only after the notice is served by them as per the SOP by way of a physical notice given to them. One notice must have given for the so-cast notice, by physical notice they have to issue. Then next is a final notice also they have to issue. That has happened. So to that extent, so many cases are pending. So now that power has given for a setting aside, and they also nominated now joint commissioners appeals. So we hope that there may be a decision will be from the CBDT, maybe the reduction of an appeals will take as early as possible.
Thank you so much for guiding us on this aspect, because we now come to know that department is also inclined to reduce the litigation and to dispose the cases in better way. So our members should take the benefit of all opportunities available and be alert when we are addressing the notices. Next is, even members are also appreciating, sir, in your initial talk, you suggested that Vivad Se Vishwas Tak scheme should be again reenacted, and Ramas Krishnan sir also seconded that. So members also asking for the same request. There is one generic question, sir, very generic. When the new Income Tax Act will be applicable and what are the changes in new Income Tax Act? So before you answer, I would like to tell that our institute is conducting so many sessions and seminars and webinars on the new Income Tax Act. To answer this question in this seminar, it would be injustice with the topic also, because this topic would need at least 2 hours to elaborate on
Yeah.
this. Still, I will request Ramaswamy sir and Ramkrishnan sir to say something.
Ramakrishnan.
The new Income Tax Act 2025 will be applicable from 1st April 2026. And basically, the concept of assessment year and the financial year has been removed.
Tax year.
Now you have only a financial year tax year for which you will be filing the returns. So this is the basic difference. However, more finer aspects are there, because now would be this time for us to unlearn, relearn all these new aspects, because each chapter has been revamped, simplified. Wherever there was the explanations, they have all been converted into subsections, and provisos are also been converted into subsections, and various schedules have been brought in the Act to have various calculations simplified in the Act itself. So the number of sections are reduced and the number of words are also reduced. But however, the essence of the 1961 Act in most of the places are there, and wherever possible, it has been simplified to have the impact over all the sections. Basically, the renumbering is also done. So because we had various sections with 80A onwards to HH, HHC, all these kind of, now it is all a numerical number. And apart from that, the concepts are also, various concepts have been brought in, which was only based on judgments, have also been incorporated. This, as Mr. Sanjay Nigam ji said, it requires a separate session, because each chapter, I would say, would require 1 or 2 hours, because the differences are so much between that. Though the essence is the same, it is having a new flavor.
Perfectly
In
right,
fact,
sir.
there is only 536 section compared to 890 or 90 sections, 23 chapters, 16 schedules. The chapters, 536, the sections are there, but there are about 4,000 amendments, complexities are there in the previous Act, 1961, notwithstanding anything contained, explanation 1, explanation 2, all these things. At least now that law is very clear that we can understand the law. 536 sections, read the sections. Chapters are separate. So all these things, but the decision rendered by the Supreme Court, High Court, tribunals, based on all these principles are going to be used by this for this sections, the new Act also. New Act is completely changed to understand. Anybody can understand the law. That is the principle they have brought out. So let us wait for your comprehensive seminars, conferences, maybe on the residential courses. It will be very useful to understand. The principles are same. Those who are already practicing in this law, Income Tax Act 1961, they are going to be there. Only thing is we have to set our mind towards understand section 148A, which section is for the new Act. 253 of the Act is there, but what is the Act relevant to the other Act? There will be a comprehensive, first 1961 Act, then 2025 Act, then the changes, then results. So that is a big task is before the Direct Tax Committee. So maybe you have to continue for some more time.
Yes, sir. Yes, sir. It is very exhaustive topic. I'll move on to the next question. Question is, what are the safeguards available for the assessee when department consider loose documents as evidence during a search?
Yes. Loose documents, there are number of cases. Right from CBA versus that case, the main case,
VC Shukla.
VC Shukla. Later on, number of cases. So many times, the loose document, the author of the loose document is very important. Then there is a presumption. 292C, section 292C, and the presumption that if any loose document is found and recovered from the premises of a particular person, section clear now that belongs to him. That is asset to him. But if the loose document itself is not mentioned any of the person's name, the person from whom they have seized, but somebody's name is mentioned. So the court have taken number of cases. Many times the court, tribunals, high court, all of them taken a view. Loose documents are dumb documents. If the loose document is not having evidentiary value, provided if the assessing officer is unable to bring corroborative evidences. If the corroborative evidences are there, he is able to match this loose document, it's a fit case for them to levy of making them as an addition. But if there is no corroborative evidences, how this corroborative evidences? For example, on money transaction of an immovable property. Somebody has sold the flat for about 5 crore, but recorded only about 3 crore. 2 crore must have been written in that. On money, they must prove it on money. The other person, the person, author of the person has to say that all the presumptions will not be applicable for this in this case. So the third party, whether given or not, they have to get an examinations, they have to take a statement, prove the records. Then if there is a corroborative evidences are given by the assessing officer, it is a loose document considered for the purpose of taxation. But if there is no corroborative evidences, the person returned by somebody, or somebody is denying that I have not written all these things, and the person is not having any idea about that name which he has written on that loose sheets. So all these things are considered. So next one is in case of a loose sheets. One important point is loose sheet, we are saying dumb document. That assessee may say that's a dumb document, I am not having any connection. But the name of the person is there, somebody's third parties, a loose document is covered from third party's house. There is a need for cross-examination. The cross-examination in the income tax proceedings is very important for any assessee. Somebody's name is there recorded. The assessing officer taken a view, your name is recorded in the loose sheet, please answer. So person must cross-examine the person from whom they have recovered the loose sheets. So this is very important. Mere following the loose sheet for the purpose and assessment is not correct.
Very exhaustive and very clear answer to the query. Sir, I'll move on to the next query. Very practical query as presented by the querist. In the case of pending faceless CID appeals, where remand report is sought from the jurisdictional officer, JAO, by CIT appeal, in this type of case, can a JAO issue a requisition notice to the assessee seeking certain assessment related documents and loan confirmation documents, etc., without having any DIN number mentioned in the said letter or so-called notice? So, very practical issue.
Actually, any communication to the assessee should have a DIN. That is the basic requirement, and documents without DIN are considered as not a valid document as per the various decisions, and apart from that, the entire CBDT instructions are there also to that effect. However, in the interest of complying with the information, because now it is not going, it is only going to be beneficial to the taxpayer by going and furnishing this information. Because if the remand report is going to be in his favor, the addition would be deleted. Unless you want the appeal to be rejected, because the remand report is not going to be filed by the assessing officer, then you are not going to get a favorable order from the CIT appeals. So I would only suggest that if the furnishing of the information is going to be in your favor, go ahead and do it. Otherwise, you can not comply with it.
Right, sir. So move on to the, I'll move to the next question. Can any investigation be done if the assessee has purchased property in United States while the assessee was living there and now returned to India? Foreign assets.
Basically, the there is a small unit called Foreign Asset Investigation Unit, which functions under the Principal Director Investigation in the Income Tax Department, which gets these information based on the passport number or various other documents, which is getting reported under the common reporting standard. So when this automatic information or exchange of information comes to the officer and he feels that subsequently you are a resident, he can put forth the through a notice seeking information whether this was purchased when you are a resident or when you are a non-resident. If you furnish that information and it is proved beyond doubt that your status was a non-resident when you purchased this property, the investigation will be closed. However, if there are, if you have been a resident when you have made this investment, technically, if you are leaving the country after September, you can be a resident in the year of leaving the country. So, and you have made investment in that year and this has not been reported or you don't have adequate sources to report. So then there can be issues that can come up by triggering a Black Money Act assessment and its consequences. So the crucial part is to prove that you are a non-resident when the investment was made and it is out of your disclosed income either in India or outside India.
No, it is true. Many times the people have come back to India. They must have purchased some properties. Maybe they want to keep the property there itself, come back to India. So the first there during the period of non-resident, because of that first 1 year non-resident, not ordinary resident, but all these things will come. So there is no need for them to give the foreign assets in their filing of an income tax return. But once you become the resident, then automatically you have to disclose all the matter in your foreign assets in your filing of a return. If you have not filed all these things, information must be shared from the outside India. That can be a tool for them to investigate whether you have invested or not. Whether invested out of your own money or whatever may be that you disclosed, why it is not disclosed. Then there are a lot of process to be complied with that. So that is why whenever a person come back to India, so that person has to give first of all, he has to give all information to when filing a return, so and so, then your passport details, how many days you stayed outside India, work out non-resident, resident but not ordinarily resident, then resident, all these things are there. So the current year, if you become a resident, you disclose everything. Otherwise, it may not come immediately, it may come later on. That will be the problem because there is no time limit for reopening of all these cases. Because it is, suppose if it is purchased at that time, you can't say it is over. My time limit under section 148 reopening will be over. I can't. For these cases, there is no time limit. It can be issue of date of identifying the foreign asset and issue date is an assessment year. If they identify the current year, assessment year is 25-26. It may be a property must have purchased about 5 years back.
So we will take further 2-3
I just
questions.
add one small bit.
Yes.
This
Yes, sir,
Black
yes, sir.
Money Act reporting is applicable even for an expat who is a resident in India. So if an expat is working in India and is a resident, the compliance of the Schedule FA has to be done.
Very alarming and our professionals should be very cautious about while dealing with such foreign assets.
Correct.
Sir, we will take 2 or 3 questions. Is the Income Tax Authority actually using geotagging of property to figure out if the land is capital asset or not?
Naturally, they have a power. So they must have identified. That is why the message is coming out. They have a power to use the geotag for the purpose of getting whether the land is an agriculture land outside 8 kilometers away. And real agriculture, easily they can identify whether agricultural operations are happening or not. Because Section 54B investment, you must see that your agricultural income, land should be outside India and claiming an exemption also, I mean, outside the limit specified and claiming all these exemptions also there. Both your land is within the taxable area as a capital asset. You say that it's not my capital asset. But there is the amendment has come, no? The aerial view has now it's a total aerial view. It's an applicable. Earlier they said Haryana, Punjab, Haryana guys said that you can take a road as a identifying the limit. Now law is amended. Aerial view, crow flying area view is there for the purpose of identifying the area whether your land is within the corporation limit or a municipal limit for the purpose of identifying as a capital asset. Once it is identified, then whether activities of agricultural action was taken previous 2 years before the sale of an asset, either by himself or his family, HUF. In case if it is no activity, then there is a required, there are a number of Supreme Court decisions, they have given about 10 points. You have to give a land revenue records, these things are to be given. Apart from they have an investigation has the right to do that.
I just add one aspect. The satellite images are being used in the assessment, faceless assessments, especially for verifying whether agricultural activity was done or not. So the claims of agricultural activity was carried out, all those things cannot be just gotten away by giving statements. It can now, the satellite images also go to prove whether the activity has happened or not. So the assessing officers are using those satellite images. It can give 5 years back how the land was and what kind of activity has happened. The satellite images can display that.
Right, sir. There are some repeated questions which I am skipping right now. And there is one last question. I think that is also covered by the dignitaries. What step department has taken to stop deliberate misuse of notice by JAO after faceless scheme?
Yes, Mr. Ramakrishnan.
The only notice the JAO is now giving is the notices for recovery of taxes.
Yes.
So
there are number of cases.
If you have paid 20% of the disputed taxes, that notice also can be avoided. So as such, the role of the JAO is very limited in the present faceless scheme. So therefore, there cannot be any deliberate attempt unless there is a tax arrear.
Right,
Section
sir.
151 is very clear about that. No jurisdiction of the assessing officer vis-a-vis the faceless assessing officers. The matter has to be referred only faceless assessment. Even 148 certain matters they have issued and matter has been referred later on to the faceless authorities, assessing authorities.
Right, sir. There are a few questions and many of are already answered by you. I can't find a unique question here. So now time is coming to the conclusion. So I would like to close the question answer session. At the end of the conclusion of the session, it is my duty to appreciate the contribution made by each one of you. Though it was a online session, it was actually the way members have asked the questions. It was actually an interactive session, and all the questions were answered by the two senior dignitaries here. Our own past president, sir, having such a busy schedule, you have spared the time at this age and at these hours for the members. It's actually we should follow such kind of dedication to the fraternity. Also, I appreciate the contribution made by the Ramakrishnan sir. Looking at your expertise, I think ICI will definitely coming up with a full session with you on these aspects. I also appreciate the contribution made by the Piyush Hajarji. He started the session. Also, there was one question for him, and I can witness that he was glued to the screen whole session, not only from the first moment till now. Also, he's there. His presence is also appreciated, and his dedication for such a wonderful session is also applauded. Also, we appreciate the efforts taken by the technical support and directors committee, secretariat, and their staff. Last but not the least, all the attendants. more than 1,500 attendees were attended this session. So that is a wonderful thing that it is a sense of achievement, that satisfaction that whatever ICAI is doing, people are accepting it and taking benefit of it. I also now request Piyush Hajarji to conclude the session.
No, Sanjay bhai, let's go ahead. Thank you all. We are on time, sir. Thank you, President, sir, once again. Past President,
Thank you.
Sir, Ramaswamy and
We started
Ramakrishna.
at 4:01. We are closing it at 6:01.
Thank you.
Very good.
Sir.
Thank you very much, sir.
Very
And we'll
good,
see
sir.
you
Thank you
again
very
and
much.
again.
Thank you.
Sir,
For the
sir.
wonderful opportunity you were given, Chairman, Vice Chairman, all the person. My good friend Mr. Ramakrishnan has also contributed. One thing is, age is a mandatory. Growth is an option. Thank you, one and all, for this wonderful opportunity.
Thank you so much, sir.
Thank you.
Yes.